Well, good morning, traders, and certainly a nice platform for the equity bulls to progress here in Asia, and certainly the US markets roar ahead again with the S&P making a new all-time high. We've got 87% of stocks higher on the session, so breadth was pretty good. Volumes are okay, with the S&P trading volume trading 6% above the 30-day average. What I think was interesting there is, while we're still waiting for the Dow to make an all-time high, the Nasdaq's there at the moment. Perhaps they, go higher if we do get a good non-farm payrolls number tonight, and the market is looking for 182,000 jobs there, so pretty much in line with the 6 or 12-month average. But I think it's interesting to see that equity markets continue to hold their highs, and the tape was a positive tape despite what we saw in credit, where the credit spreads didn't really do a huge amount, and we actually saw US Treasuries pretty much unchanged on the session. They saw a bit of an about turn throughout the day, and we would have liked to have seen the higher oil price. I think if you look at oil, they did have an early start to the session in terms of the gains. There was a report coming from Reuters suggesting that OPEC may look to cut the rate of production, or their quota rate, should the inventories not head down to the 5-year average, which of course is what they're targeting. And I think throughout the day we did take a focus on the weekly inventory data that came from the Department of Energy, which showed a massive drawdown in both crude and a decent drawdown in gasoline inventories, although they were predicted, I guess, in somewhat capacity by the American Petroleum Institute inventory numbers, which came out in the prior session. I think later on in the day there probably would have been some selling, and there was a bit. The tape did roll over a little bit after we saw Donald Trump announce that he was pulling away from the Paris Accord agreement, and I think probably the idea that we could see the US increase petroleum output on the back of that to some degree caused a bit of angst in the oil market, and it's come back down a little bit throughout the day. And we've got oil prices down about 50 basis points on the day. Haven't seen the energy sector down though. I mean, as I say, all sectors are up in the S&P, and that's provided us with a solid platform to progress. I think the data has been pretty good in the US. The ISM manufacturing numbers expanded at a slightly faster pace. We saw new new orders component increasing nicely. The employment sub-component was strong. And we also saw the ADP private payrolls number coming in substantially higher than what the market was looking for. So again, giving us some belief that tonight's payrolls numbers should at least come in line, and certainly not much lower than where that is as well. And the market will be fairly comfortable with that. One of the big things we're watching today is, while we do think that the market's going to open about 24 points higher, is what happens to the banks. We think the banks will probably open up a little bit higher, because if you look at BHP's ADR, it's only up about 80 basis points. Spot iron ore price was down a touch. We've got the futures stabilising up about 0.5% on the day. But I think it's the petroleum exposure for BHP which is probably causing a little bit of angst there and not really causing it to move up any higher. Interesting that Vale's US listing was actually down 2.2%. It's got a pretty strong correlation with Fortescue Metals, so that's one to keep an eye on and see how the iron ore space trades today. I'm really quite interested to see how the Aussie dollar's trading. I actually think Aussie dollar looks weak against the pound. I quite like the idea of buying the pound against the Aussie at the moment, even though we do have the political risk next week, and I still expect Theresa May to do fairly well in that and get a majority, despite her doing all she can to try and throw that election away at the moment with some of these U-turns that we're seeing. But I quite like the idea of the fact that we've broken through the May downtrend in sterling Aussie, and I think that probably trades back up into 176, 176.5 in the short term there. One to keep an eye on. I think a lot of traders are still looking to sell Aussie against Kiwi. That's trending nicely lower at the moment. But I think the idea is next week with the GDP reading in focus, it's going to be a pretty benign quarter. We've even got National Australia Bank calling for a contraction on the quarter, and the idea now that the swaps market is pricing in 5 basis points of cuts. I think if we get down to say 30 to 40% probability of a cut over the next 12 months, the Aussie will probably become more of a funding currency. And actually, and the idea of central bank divergence, when other central banks are looking to hike policy or look to cut back on unconventional monetary policy settings, you could see the Aussie dollar becoming a little bit more weaker going forward there.